What's up everybody, welcome to my channel. In this video today we're going to be walking and talking about some stocks, right? I'm still trying to figure out how should I hold this thing. Should I hold it up like this? Should I do it like this to do the vlog? I don't know how you guys do vlogs. Like, how do you guys do vlogs? I'm not sure. But anyways, if you have not started investing, I've been telling you about investing about 2-3 years now, maybe 2 years. And if you have not started investing, 2023 is definitely the year that you need to start. Here's why. Back in about 2009, probably 3 years before that, I'm just relying on memory now, we were in a bull market, a bull run. Like, all the market was doing was going up, going up, going up. And this was like for a good 3-4 years straight, right? So during those time, like, any stock you buy is like you touch gold. It just go up. So but now it's a bit different. I'm not saying there weren't opportunities within the last 2 years, but I'm saying in a bull market it's a bit different. It seems like it's way easier to make money. Now if you started investing like about, say, January 2009 and you hold on to a few stocks, chances are those stocks would be down right now. And one of the important things why you need to start investing today is that the main market, from memory, is down about 32% from its all-time highs in 2019, right? So guess here. Now think of the stock like a Gucci bag that you wanted to purchase years ago. It was $2,000 for the bag, right? Then now the bag is selling for $1,500. Would you be inclined to buy it now, or you would want to buy it when it was $2,000? So that's one way you can look at what's happening. But I don't know why like human psychology work like this. They tend to shy away when the stock market is down, when they should be accumulating more shares. Well, guys, and remember, when you're investing, you're not just investing on a line and a chart, right? You're investing in a company behind that little line and the price that you see. So when you invest in that little line or you pay a price, you're buying a small piece of that company. So that's how you need to look at a stock. It's nothing complicated really. So you at least need to take the time out to know what you own. So you need to know what other companies the company invests in, how much money the company has. So you need to know if the company is broke, are they going to run out of cash, are they going to rely on borrowing money from the bank to sustain their operations. So this is where things like the balance sheet really come in play. And you have to understand the balance sheet ratios, like the current ratio, the quick ratio, and things like the debt to equity ratio. I know you're going to start investing, so one of the mistakes you need to look out for when you're investing is that you need to set a goal, right? And you need to take profits. Is that one or two? So that's two. And here how it works. So let's say you invest $100,000 in a stock, and you're saying, boy, you're going to hold this thing for the long term. Now, your long term gain could have been 1,000% returns, just saying. And within a year, that stock happened to give you the 1,000%. Are you going to still hold the stock for the long term, or you're going to take some profits? So you need to have a goal, right? So when you hit that goal, you take some profit and then you say, all right, let me assess what's going on and see if I should hold this stock same way for the long term. Because the reality is that stock that went up 1,000% can have all its gains wiped out. So that's the reality of it. You have to have a goal when you're investing, and you need to take some profits. Can't go broke taking profits. Have you ever heard that saying before? Yeah man, make sure you secure the bag. Keep something for yourself. And guys, these are things that I didn't know when I just started out. So I'm telling you, so you don't have to make the same mistakes like I did. Another thing now is that if you're looking for like short-term opportunities, anytime you hear the word stock split, get ready to buy. Essentially what this is, so yeah, so before I was rudely interrupted by those cars, like I was saying, here's another one again. Like, yeah, hurry up and move, man. So right, as I was saying, whenever there is a stock split, investors tend to like hear this thing, so it will cause the stock price to move. Another thing you need to look out for is it's really windy at the moment, so I hope there's not a lot of wind being captured. I hope this thing is good enough to block it out. So another thing you need to keep in mind is that whenever you hear there's gonna be something like an acquisition where a company is buying another company, you need to look for the trading opportunity in the company that will be acquired. So for example, if NCB come out and say, boy, we might buy JMMB, then a short-term trading opportunity will present itself in JMMB. So that's another thing you can look to capitalize on. At this point, the cold starts soak through the gloves. Yeah. So I didn't go in the grocery store to buy anything, I just went to cool off. Or should I say warm up. When you write your notes to make your videos, it's a whole different thing from freestyling, I swear. Like, I'm here thinking the whole time, what's next to say? Chano Star. Now, the key takeaway here is that when you're prepared, you're going to execute a lot better. No, I'm just looking at myself and like, yo, bro, you're handsome. So another thing that you need to look at is things that are really happening in the economy, right? So for example, so a stock like main entertainment, from COVID free up, you realize a lot of parties take place. Now when you look at the larger parties, who are, we don't call it now, host, whoever is responsible for setting up that venue is more likely gonna be like a main entertainment. Now when you keep on see these parties happening, you need to be thinking like, is main entertainment responsible for the venue? Now these are the things that drive revenue in the company, right? And then more revenue, once the company is efficient, then it's going to be more profit. So when you start see these things happening, then you start look out and anticipate the next financial statement. But the key here is that you want to be in the stock before the financial report drop. So let's say main come and say, boy, we triple the profits. You are going to capitalize now when the news hit the market and everybody's rushing for try to get some shares. You're going to be in the stock long time. Remember what happened to Supreme Ventures Limited, right? When scratchers hit, everybody did buy up them scratchers, they must scratch. And the big advertisement are going to be, you know, somebody are going to win the $5 million. What was it, 5 million? And then it's going to make the headline. Now everybody want to get piece of the 5 million. So everybody are going to buy scratchers, but are they going to win the 5 million? I don't know. But what will happen here is that the company will make more profit. And what happened? Supreme Ventures recorded like $1 billion in revenue. Yeah, I think so. I think it was $1 billion in revenue. And boom, the stock price went from $20 to about $30. That's what, 50% gain within a month, if I remember correctly. So you have to look out for those opportunities, and that's how you kind of see some short-term ways to make money in the stock market. Now, if you don't want to go about picking individual stocks, you can always invest in unit trusts, right? The unit trusts are pretty much like funds where a company manages the money for you. So you just give them the money and they manage it. You don't have to worry about understanding the financial sheets. You don't have to be following up reports. You don't have to do anything like that. And guys, the thing is that you have different types of mutual funds or unit trusts. So you have like a bond unit trust, real estate unit trust, an equity unit trust, and sometimes you have a combination. So Those are things you need to consider. And guys, if you want to really learn more about investing in the stock market, I've done a course on Udemy. Sometime it goes on sale for like 50% off, so you can check it out. The link will be in the description of this video. The question which I often get a lot is, which stock should I invest in? Which stock should I buy? So I just give you an example of how you can go about picking stocks, right? So you would have probably not even realized that you are better stock pickers than you would have thought, because you're on the ground daily, you're in the streets daily, you're seeing what's happening in the parties, right? You'd have seen what's happening at the Supreme Ventures outlet. So whenever you see somewhere individuals are spending their money, you need to now start ask yourself, which stock is behind this company? Every time you go to the supermarket, which products you take up? Think about it. Which products are you buying? You can start with those simple things, guys. Those are the simple things you need to ask yourself. Now, the thing is, when you do this now, here's what you need to do. You need to start comparing apples like apples. So, for example, again, you're going to compare a Sagicor Financial Group with a NCB Financial Group. Who has a more growth potential? Which one has a better earnings per share? Things like that. Those are the little things you look for, and then decide which one you're going to go with. So while I can't give you advice, I can tell you what to do to an extent. Identify your stocks, right? And then when you open your brokerage account, wait, we never talked about broker yet. Alright. So you're going to open your brokerage account. You're going to be assigned a licensed financial advisor. Then you work with your licensed financial advisor with the stocks that you have identified. Put your licensed financial advisor and let them advise you on which stocks you should be putting in your portfolio. Oh, on that note of broker, like I always get the question, which broker should I use? Which broker should I use? Most of the brokers really do offer the same service, right? So it all boils down to probably like the fees, customer service, how easy it is for you to hide your money. And another factor you need to consider is your ability to link your account to JTrader Pro. For example, with the JCSD number that JMB provide you with, you can't link that to JTrader Pro. However, with a broker like NCB, you can trade on their own platform as well as you can link it to JTrader Pro. However, when you use NCB JTrader Pro, you're going to pay a slightly higher fee than if you were to trade with their own platform. So those are the things you have to consider. Another thing as well with the brokers is that the minimum amount varies to own from broker to broker. So from memory, say JN Fund Manager is about 50,000, JMB now is about 25, Barita is about 100 units of a stock or about 20 grand, right? NCB Capital Markets, if you have an account with them, you should be good to go. You can easily sign up online. So maybe I'm gonna stop the video here. Catch you later. Guys, to learn more about investing in the Jamaica stock market or investing in general, be sure to check out my stock market course on Udemy. The link will be in the description below. If you purchase the course anytime this week, you'll be getting a 50% discount. So that's it for now, guys. Thank you for watching. See you in the next video.